Happy Friday, everybody. I hope you had a great week. Today is January 27, 2023, and this is your Friday planning video. I want to keep on one of the topics from last week and also open up with a bit more of the tales from the front lines that I can share with you. First, let's talk cash management. Recall that last week we spoke about the importance of this. I want to talk about what many of you please need to think about. I'm going to be careful here, but a Bloomberg report from January 13th of this year stated that two of the largest banks here in the United States have just given notice to all. They may be getting ready to pay out more higher interest rates to depositors at their banks. According to the article and my research as well, these two banks and a few like them, maybe where you bank, are paying 0.01% on the cash that you have in your accounts, to the tune of estimated trillions of dollars in deposits at major banks. Now, in the quarterly earnings report conference call from just a week ago, from the CEO of one of these banks quoted that $560 billion of consumer deposits at his bank were in low or no interest-bearing checking accounts that were on average yielding 0.06%, or over 4% less than the Fed funds rate. Like last week, to keep these videos from getting stale dated information, I only want to give estimates. Please call me or look into it to get accurate data for the time. This 0.01% compares to anywhere from 3.5% to over 4% being offered on deposit in some online banks. We can also examine CDs or U.S. Treasuries here. If you want to discuss these, we can definitely talk about using CDs or Treasuries as part of your portfolio. Call me for the latest rates that I can get you. Okay, that's all for cash management today. Please talk to me if you have questions. But as I told one of you this past week, just ask your bank, what interest rate am I earning on my cash on deposit? For the Tales from the Front Line portion today, I want to discuss two quick items. It seems that one, although we have said it over and over again, we still have a lot of work to do on it. Beneficiaries. Please, 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 while you're asking questions about your rate at the bank, call our offices, call your 401k provider, call your insurance agent, but please ask who your beneficiaries are as listed on your plans and policies. Once again, this week I ran into accounts with incorrect beneficiaries that had not been updated to account for family changes, and also missing beneficiaries. The missing ones happen for a lot of reasons, but no matter, after the fact, both of these events cause problems, and problems you do not want to have to deal with. Finally, today I want to talk about the beginning of the year actions that we should be taking. I think we've listed a bunch of these over the past weeks, but here is one more. New or old, no matter, please open that envelope you received from that retirement account you have, specifically from your employer, even if it's your IRA. In addition to looking at the beneficiaries, you didn't think I'd pass up one more comment on that, but in addition to that, please look at the asset allocation. Last week we spoke about asset location. Let's focus on asset allocation in your plan. If you've never done this, let's talk about it. Many of you have not, and if you have not, the default investment in the past has been something that may not be what you want or need. So take a look. You may also have noticed last year was not an especially good year for the markets, so your allocation may have gone astray. I'm not suggesting that you change your allocations because we had a bad year. In fact, for the right people, it is time to rebalance more in favor of an aggressive stance. I had a conversation this week, and I likened it to getting a call that eggs were on sale right now for $1.49 a dozen at the store. You may just back up the truck these days. While stocks are still bound to go up and down, pay attention to the Monday market updates for that information. They're almost 20% lower than they were a year ago. At least the averages are. So these moves tend to mess with all of your asset allocations. Please take a look. Make sure your risk profile is still how you want it to be. Final note, this time on those of you that will respond to the allocation question with the I'm in a retirement target date fund. Those funds are designed specifically to assist you in your investment planning. I'm not getting into that today, but another thing I recommend you do is look under the hood of that fund. It's easy to do, but more people do not do this. Find out what the allocation of that target date fund is. Although you may be retiring in 2050 with all the other people at that time, is the risk profile of that fund what you want it to be? Okay, these and so much more conversations we're having as we get started in 2023. Please keep up with the planning videos as well as the Monday market updates. We'll keep talking about planning ideas on Fridays and hope some of these ideas help. Thanks for watching. Please feel free to share this with others who you think may enjoy it. Have a great weekend.